the scene, it's your host TTP. We're flying high in the crypto sky, just you and me. From Bitcoin rush to Ethereum, we traded all the coins with the trading parity, making that joyful noise. We got bots, we got plots, charts on the big screen. 3 comments to Wick, Hunter with a trading machine. Laughing all the way to the bank, it's a fun parade. With every trade we made, watch how we get paid. TTP's got the formula, flipping coins like a spatula. In the crypto game with the vernacular, spectacular. From the morning to the night, we're streaming with the light. Join the trading parallel, we'll teach you how to fight. Dive into the charts, the RSI, liquidity at a glance, trends on the rise. We never leave it up to chance. All trading Ganium, tools of the champion breed. With AI and math, we're planting the money seed. Laugh with us, trade with us, ain't no looking back. You're with the parrot now, leading the pack. Alpha profits, snap plus with the crypto law. TTP's on the mic and he's ready to soar. TTP's on the mic and he's ready to soar. TTP's got the formula, flipping coins like a spatula. In the crypto game with a vernacular, spectacular. From the morning to the night, we're streaming with the light. Join the trading parallel, we'll teach you how to fight. Dive into the charts.
Hello guys, welcome to the Train Parrot. Yesterday, after pinching 89k, we have seen Bitcoin moving back up into the price, into our potential target of 96k, 97k. In today's video, we're going to have a little bit more of a focus on longer term. Where are we in the cycle? And for that, I have a very special guest today. Matt is joining me today. Here he is. Hi, Matt. How are you doing today?
Hi, I'm great, thanks. Thanks for having me back on the channel. It's been a while.
Yeah, it's been a while. It's great to have you back because Matt is specialized in on-chain data from Bitcoin Magazine Pro. If you haven't seen the website, go and check it out. There's a ton of value in bitcoinmagazinepro.com, I believe.
That's right, yes.
That's correct. .com, and there was a rebranding going on. So if you are familiar, the previous name was into...
Look into Bitcoin.
Look into Bitcoin. And now it has been branded with additional value as well. So check it out because there's tons of free charts. We are going to review on-chain data. We're going to look in combination with TA. Earlier in the video, I'm going to just do a quick catch up with where I left you last night with the breakout of 93, 94K, I think. Before I went to sleep, I published a very quick short. So I'm going to just quickly show my charts and let me hide the comments. And by the way, guys, if you appreciate this stream, make sure you hit the like, write down comments, be as loud as you want. It's going to be as well some QA. So if you have questions specifically about Bitcoin, where are we in the cycle, potential targets, if things are looking bad or good from the point of view of on-chain data, leave all those questions in the comments. Let me have a look at what we did yesterday. So if you can see my chart, you're going to see that we pinch the level here of 0.786. So that is a little bit less of what we did in 2020. So in 2020, the first pinch that we did was the lowest, and we almost got into Fibonacci 1 level. And remember, I've been saying I have an order here. So to be fully transparent, my order didn't get filled because I have it slightly lower. And that is part of the game. But I'm still riding my 91.8 initial order. And I'm happy to see that we are getting to those levels of 96. The CME gap probably is already gone. We're going to look into this. So that is, this happens all the time to me. The 97 at the premium on CME, now it's gone. So the question now, which I left on Twitter, is, do you guys think that we are just here to grab the liquidity at the 96, 97.5, which was the conservative target that we've been talking since Sunday, or are we going to go to the next chunk of liquidity? And I think for that, we will need to do a little bit more deeper analysis. Probably I'm going to publish another video later today with that. In this video, we're going to focus more on chain and collaboration of an exchange of ideas with Matt. So I believe, Matt, you have some long list of data that we could start showing to people. So if you want to share your screen.
Yeah, I'd love to. I have probably too much data to share with people, so we'll cherry pick what suits us the best. So first and foremost, I have this one, if you can see the screen here, and this is the short-term holder realized price. Now, just a little bit of background on what this metric is showing us. It's showing us the average accumulation price of new market participants. So looking at on-chain data, we can track every transaction that happens on the Bitcoin network. And from that, we can see when long-term experienced holders are selling, accumulating, etc. And we can see when new capital is flowing into the market. And usually a good point within a bull cycle to reaccumulate is when these new market participants are at break even. So if I just zoom in on the previous few cycles, we can see specifically here in 2017, for example, every time Bitcoin came down and retested this level, it was a great opportunity to buy the dip. It happened on countless occasions, and each one signified a local low before Bitcoin rebounded higher. If I just zoom back out and go into our current cycle, we can see in this down move here, this is just looking at the closing price of BTC, so it doesn't include the wick lows we get. This is currently sitting at just above $88,000. So that 88K is aligning with some technical 90K-ish strong support levels, which we anticipated to be some big buy areas, like you were saying. And from that, we've obviously had quite a strong rebound. So we can see at this point, new investors are coming in, buying back in at that average entry price, and that's obviously rallied the market a little higher.
And a question about how you personally interpret the short-term holder realized price. I personally think of it as, well, it's the average of the short-term holders, and they tend to be a little bit more paper hands, if you want.
Irrational, yes.
Yeah, so they are more affected by psychological things and fears and all these things, FUD. So in the past, in previous cycles, it was some sort of magnet. Every now and then we were coming back and testing it. 2017 is the perfect example of that. But after in 2021, things became a little bit more oscillating around it. And in 2023 and 24, we even spent months below it. So the question is this because in this cycle, people are more in fear retail and that we spend so long sometimes below it? Because it used to be that line in the sand where we say, well, bear market or bull market. But now we spend even 3 months below it or 2 months below it, and then we recover, which is really weird. What's your take on that?
Yeah, so of course, great point. And this is why we like to look at multiple points for confluence. Just focusing on one data point is probably going to miss the forest for the trees, and you're going to put too much emphasis on just one particular thing. So here I've loaded up the fear and greed index. And one potential reason why I think this cycle is looking a little different to previous cycles is if we just look at the sentiment amongst investors. In this cycle, we broke the previous all-time high before the Bitcoin halving event, which has never happened before. The halving event was around April 19th or so. And prior to that, we'd made a new all-time high, which, like we said, had never happened before. So maybe we had this pre-euphoric pump, which kind of required a little bit of a cool-off period for BTC. And if we were looking at other metrics for confluence, such as something like this, the fear and greed index, when we're beneath that short-term holder realized price, we can see extreme fear in the market. And if we look at more macro indicators to show that we're still within a bull cycle, then this gives us good opportunity to potentially buy at a discounted price, kind of similar to what we saw here in 2019 before 2020, the COVID dip, where we ran up probably too high too fast. We had an extended period of sideways choppy drawdown period. Of course, the COVID 2020 dip threw a bit of a spanner in the works there, but following that, once we actually recovered, made new highs, that's when things really kicked off with some bullish momentum. So while this cycle does look different and every cycle is unique in its own right, there are little similarities that we see between them.
Mm-hmm. Makes sense. Makes sense.
And I think another great chart we can look at is, if I can find it, the BTC growth since cycle lows. So this is comparing our current BTC cycle from our cycle lows to the previous ones. And we can probably ignore the first two cycles because the returns were just absolutely exponential and very dissimilar to what we've seen since then. But what we can see is the previous cycle, 2018 to 2022, and that 2015 to 2018 cycle, we're very closely following them at the minute, probably most closely following that 2017 cycle, where rather than having this double top in price action, we have this slow, long grind to the upside, which is actually very nice and healthy for price action, rather than just big exponential gains, which we all love to see. If price can have these big moves to the upside, a nice cool off period where we grind, set a new base, investor expectations kind of get accustomed to higher prices, then new capital flows in, and that's what pushes prices higher and higher.
Yeah, yeah, makes sense. Growth since cycle lows. So there's an alternative way of seeing this. Instead of the cycle lows, I remember there was a different visualization that instead of taking the cycle low, it was taking the cycle high, if I remember right.
I'm not sure if we have that one. That might have
Okay,
been on a
okay.
different chat, on a different website.
Yeah, I think I got it from Benjamin Cowen. I think he's got
Okay, yeah.
two different ways of doing the full growth of the cycle. Yeah.
Yeah, and another way you can look at it rather than just the cycle lows is since the halving event. So if we just look at bull market
Mm,
comparison since then, because as much as we may or may not believe in stock to flow and feel like that really influences the Bitcoin price action, what is undeniable is the inflation rate of BTC dropping by 50% is a positive thing for price appreciation. Just simple supply and demand economics. There's less supply coming in. If demand even remains the same, we should see price appreciate. So what we can see is post-halving, we usually have this 6 to maybe 9, 12-month period where we have some choppy consolidation, boring price action. This is to let miners kind of readjust to the current economy. And then following that is when we enter the exponential phase of the cycle, the really fun part, let's be honest. And what we can do is, again, see that we're very, very closely following this 2017 cycle post-halving, where we have this boring sideways period. We start grinding higher. And hopefully now we're kind of entering that phase where, like I said, things just start going parabolic to the upside, especially looking at fundamental factors in the US. Things couldn't look more bullish from that perspective. And
yeah.
from on-chain stuff, we're seeing long-term holders starting to reduce their selling that we saw at around $100,000 as they're seeing the opportunity cost of holding BTC here for considerably higher prices to make selling here just not worthwhile.
Yeah. Have you got, I'm just curious, have you got any chart that is showing something the opposite, something scary, something to be aware of that could go wrong at this time in the cycle?
Yeah, of course. So one that I really like, which it's not flashing any danger signals right now, but if we look at the value days destroyed multiple, we can see that over the past few months, this has shown that we have seen quite a lot of selling from long-term investors. So what this is looking at is a metric called the coin days destroyed, which is tracking, we call it the velocity of money. So if we
Yeah.
take, for example, one BTC and held it for 100 days before moving it, we would add 100 coin days destroyed. And then what we can do is just multiply that by the BTC price at that time, do some other funky little calculations, and then we get the value days destroyed. This is just to try and weight transfers or sells from the largest and longest holding BTC participants. And what we can see is when this spikes to the upside, it's when these experienced smart money players are beginning to take considerable profit on their positions. And what we could see is when we reached $73,000, $74,000 in March 2024, this was spiking at levels that were usually seen at all-time highs. A lot of people were taking profits. Potentially, this was maybe long-term holders selling to accumulate the ETFs as this was post-ETF
Yeah.
launch. So that is something to consider as well. But either way, like we said, making a new all-time high before a Bitcoin halving usually leads to some euphoric profit taking. So from that also contributed to this long, boring, choppy period we had. And now we are seeing some long-term holders begin to take profit, especially as we breached $100,000. What we can see is this has actually begun to decline quite noticeably, which is very healthy. Like I said,
Yeah.
long-term holders are now taking their foot off the selling pedal, sorry, and waiting for higher prices before any more considerable profit taking.
Yeah. I have one chart that looks really ugly and I want to share it. I want to give a a heads up on that chart, because people are going to think, oh, you're bearish, you're going to just sell all your Bitcoin. Then no, that's not the case. This chart is showing us that we are in very bear territory at the moment. But we could take this with a grain of salt and maybe think that something has changed, and potentially the nature of Bitcoin has fully changed in this cycle, which definitely has. I mean, we have the ETFs, we have institutions, and I was expecting that. Well, everybody was expecting that that was going to have an impact in the network. And here we have the number of unique addresses that appear for the first time in a transaction of the native coin in the network. It takes half an hour to say that, but it's actually worth it, because if you look at this cycle, 2017, you get a peak. That means that tons of people were opening a new wallet and transacting for the first time. After this peak that was pretty scary, there was a drop that put a new low. You break the moving average. I think this is a 30-day. No, this is the yearly, the blue, and yellow is monthly. Let's confirm that, because my brain is not working anymore with this flu. 365, yeah, that's a yearly, and 30, perfect. Okay, correct. And then we have this move where you lose the moving average, then you break out, boom, and you go towards the moving average. In 2017, 2018, that had the effect of, one, the peak being the peak of the cycle, and the retest of this moving average, the first time you approach it, becoming the final crash in the market, the final flash. Then next cycle, you reach this top at 557,000 new wallets that transact for the first time. You lose the moving average, you find a bottom, and you hit the moving average. At that time in the cycle, something different happens. You get a higher high in the price instead of the final capitulation, which is the word I couldn't remember before. That's 69. And then this cycle, you see these peaks here, a double top indeed, which is 557, very close to 557, very close to 600. So you can even put a trend line here. It's not perfect, but more or less is somewhere there in the linear regression. And that top was here. At that time, I believe there's the ETF. And what effect had the ETF in the price action or in the number of wallets transacting for the first time? That it started the journey back down as if we were a part of the moment, which is supposed to be the blow of top. So from the point of view of the blockchain, that is the top of the market, because there's too little transactions. And now we are at the time we are hitting the moving average, which is corresponding with this 69, or is corresponding with the capitulation in 2018. So I thought this moment in here should be something meaningful. If we break 108K, then we could be confirming, if we put a high at 120, we could be confirming that we are entering in an era where Bitcoin can survive not having enough players in the network. And that could be the case. That could save the day. And if that hypothesis is wrong, well, we are in bear territory from the point of view of this particular indicator. And I know you're familiar with this indicator. I think we reviewed it together in a previous stream. What is your take on this, Matt?
So yeah, I do think that the ETFs and other derivatives and even micro strategy, just something that gives you some sort of crypto exposure, are becoming more and more popular, which is of course taking away actual network utilization. There's also the argument that Bitcoin's been around 15 years now. A lot of the retail that are going to get into Bitcoin may have already set up wallets, and at that point, if they reaccumulate, it's going to go to their previous wallets that they had. Therefore, the new unique wallets being created may not continue to rally. But what we can see is, if I can just share my screen, while we are seeing a decrease in the amount of new unique wallets being created.
Sorry, I'm getting your screen now. Okay, cool.
Yep. We are seeing the amount of value in terms of transactions increasing. So this is the advanced NVT signal.
Yeah.
This is looking at the network value to transactions. And what we can see is even though there are less users, unique users coming onto the Bitcoin blockchain, we are seeing the average transactional value massively increase. So maybe we're not seeing a million new users coming in and transacting $10, $20, but we are seeing users coming in and transacting $10,000 to $100,000. So
Yeah.
maybe Bitcoin's narrative has changed from this peer-to-peer electronic currency to this store of value and international settlement asset, which, whether you like it or not, is currently the reality. So even though we are seeing some somewhat seemingly bearish signals in the decline in new users, I don't necessarily think that's an immediate bearish sign, as long as it's backed up by real network utilization like we see in metrics like this one.
Yeah. And actually that makes sense, because if you think about that we are talking now a lot more about institutions that are taking a big piece of the pie. As a consequence of that, I will expect larger wallets, less transactions, less new wallets, and all that stuff. I'm not very familiar on how, or I haven't heard any good source telling me how BlackRock is managing their wallets. All I know is that initially they have big wallets and then they were spreading across multiple wallets, which generated lots of signals to trigger. I think that was maybe 1 or 2 months ago, but I haven't had anything really official. That I believe all of that is a little bit of speculation, unless you know something else about that.
Well, as far as I'm aware, a lot of the particularly spot ETFs are using Coinbase as their custodian, and even there's rumors that MicroStrategy are holding a lot of their BTC on Coinbase as well. So these will mainly be aggregated wallets where, rather than transferring to their own unique addresses, there's just one big pool of Bitcoin where Coinbase are managing who owns what, etc. But an analogy I like to think of is if you imagine gold coins as a currency hundreds, 1,000+ years ago, where everyone was trading just small pieces of gold coins, etc., to where it is today, where no one uses gold. You have hundreds of bars of gold locked in a vault somewhere, and then if you need a big international settlement, maybe you can move $100 million worth of gold. That might be where Bitcoin's headed, where previously it was everyone trading a few satoshis here and there just to trade, use it as a peer-to-peer currency, whereas now it's kind of becoming the lock away in a vault, and when you need to make a big transaction, that's when it happens. So it does change the economics of how the currency is actually being used, but that doesn't necessarily mean that the price won't appreciate being reflected by that.
Do you keep an eye on the health of miners when it comes to these changes at the moment in this cycle? How does do you think affect the miners in terms of their profits, or how sustainable things are for them, given that you get less wallets, less microtransactions, maybe larger amounts? Is that still sustainable for them as a model?
Yeah, so I think at least currently that's still sustainable. Of course, if we're talking decades into the future when the block rewards have reduced massively, then at that point, fees would take a majority of Bitcoin miner rewards. At which point, if there's less and less transactions happening, the only way that miners would continue to be profitable is if fees for Bitcoin transactions massively increased. But what we can see is at the minute, that still isn't the case. The block reward has been reduced to 3.125 BTC, but we're still seeing a huge amount of profitability from miners. The block reward is still their main incentive by a huge margin. So like we said, maybe in a few years, we do see Bitcoin transactions as it becomes this asset, which is transferred less and less, increasing massively to account for this. Maybe we see countries, nation states, big corporations renting out block space for the guaranteed transactions that they need to put through. And each fee is hundreds, if not thousands of dollars, which wouldn't necessarily be great for individuals like you and me. But this is maybe where we use other scaling solutions like the Lightning Network and other layer 2, layer 3 solutions to make these cheap and efficient transactions for what it was intended for, this peer-to-peer currency, at which point these Lightning transactions also wouldn't account as unique wallets, unique addresses on the Bitcoin blockchain. So it all kind of plays into effect. But as far as I can see from a mining perspective, things still look quite healthy. I'm just sharing my screen now to show a metric, which is the Puel multiple. Now, what this is looking at is the miner earnings in USD denominations today compared to a previous yearly average. So what we can see is post-halving, we see this drop instantly, well, overnight in a one block time, we see their minings drop considerably. So at this point, miners are earning, however much, hundred thousands of dollars a day, depending on the size of their operation. And then following that, boom, it cuts 50%. So the only way that miners would regain that profitability is for Bitcoin's price to appreciate. So we have now seen this go back above one. It's currently right on one as we film this, which means that miners earning today are the same as their previous yearly average. So even though we are seeing less transactions, it's not like miners are earning less or really complaining. We're still seeing hash rate and the mining difficulty continue to increase pretty much exponentially, because all of these still see the value in pouring resources into securing the network to try and get that block reward.
I have a very specific question. Sorry to put this one. So if you have to pick 3 indicators for finding local bottoms, which ones would you pick? And if general markets had a big correction, and I'm not talking a 1%, I'm talking a large correction, one of those that we remember, 2008 or whatever, where would you see Bitcoin finding support in this market? I mean, what will be your choice of support for a big event in the general market? So it's 2 separate questions.
Good question. So again, this is where we try and look for confluence. And like we looked at the short-term holder realized price previously, we can isolate this to the long-term holder realized price, which is the cost basis of the market's longest holders of BTC. This includes people that have been holding Bitcoin since it was just a few dollars all the way up to a few years ago. So this is constantly changing, this cost basis. But what we can see is historically this is marked within a few percent. Obviously, it's not going to call the exact bottom, but it has marked the general region where Bitcoin's price has bottomed out. Currently, this sits at around $24,500, which would be a pretty catastrophic 75, 80% drawdown. But that is typically what we see within Bitcoin bear cycles. But this is increasing. So by the time we get to hopefully the market cycle peak, like we see this radically start to increase, it's considerably higher at that point in time. But this would be a good one to watch as a where could BTC bottom in this cycle. Alongside that is the Cycle Master, which is another good one that I like. Now, this is collating a multitude of different on-chain indicators to give us these pretty just simple overvalued, undervalued lines. And what we can see is zooming in, this has actually called not only the Bitcoin market bottoms incredibly accurately, but also the Bitcoin market peaks. So this would definitely be one I would be watching as well. If you'd like a little more info on how we're actually calculating all of these, you can scroll down, but I don't want to take up too much time.
Yeah.
What we can see is this is currently sitting at around $30,000, but again, ever increasing. And just for fun, the top is currently sitting around $192,000. So that would be a good general region. Once we see blood in the streets for long-term holders, people who have bought Bitcoin years and years ago are now in a majority loss, as well as aligning with on-chain signals to identify a market bottom. Those are 2 great points. And then alongside something like that, because we always like some confluence, when we're actually seeing people sell at a loss. So this is the spent output profit ratio. And this is looking at the profit or loss of a BTC when it was transferred compared to when it was accumulated. What we can see is when people are moving Bitcoin at a substantial loss, this usually indicates market bottoms. When people are moving BTC at a substantial profit, this usually indicates market peaks. Interesting to note, just a couple of days ago, we actually were negative on this as Bitcoin was around $90,000. People are actually selling at a loss on BTC, only down, 10, 15% from the highs, and people are already capitulating for a loss. Crazy. So as most on-chain data points show us, is that this is just mass psychology quantified. When we see blood in the streets, when we see capitulation, the best thing is to do the opposite, act as a contrarian. And this just shows in real time the psychology of investors being, for the most part, not very good at investing, unfortunately.
Yeah, definitely. Yesterday, I was making a video, and you were making me remember that. If you go back one chart, the long-term holder realized price, I think is called.
Yep.
That one is nice because it shows the 3 cycles. We got 2017, which I call, and sorry, I'm still with the flu and it's very difficult to talk. I was even wondering, why am I doing a live stream still sick? But well, people still appreciate it as long as people can understand. So 2017, the rally towards the top, that blow of top, is kind of perfect, right? So you can even draw like a curve, and and it follows the curve perfectly well. Yeah, sure, there are correction of 30-40%, but it's very smooth to the upside. There are not big breaks in between. 2021 is like an elephant, drunk and with hiccups all over the place, right? You do a first peak, then you go back to 4K, and then up, and then in the middle of 2021 back down. Is definitely drunk Bitcoin at that point, and that is because there was COVID, right? So COVID caused that Bitcoin was all over the place, sneezing, just like me now. And this cycle where we are is not as smooth as 2017. But what the question that I'm always wondering myself is, we get a perfect cycle, 2017, if you allow me to call it the perfect cycle. Then we get a cycle when at the beginning something goes wrong, COVID, prior to halving. What will happen to a cycle like the one we have now if we were to have something equivalent or even larger than COVID at this point in the cycle, almost 80% completed? Will that cause that we just call it a cycle and we just start coming back down, and with very few dead cat bounces that don't allow you to exit properly? Or will there be still some sort of higher high dead cat bounce like the one we have in October 2021? And I think that is the question that is constantly in my head as a holder, not as a swing trader in this case. Because if I'm holding and Bitcoin crashes from 108 and it goes to, let's say, 60, I'm okay as long as I get that dead cat bounce, that then I can reduce my expectation and saying, well, as soon as I get my 50% golden pocket, I'm out. But if I don't get that thing, then I'm screwed, right? I'm going to end up holding until the next cycle. So what would you expect if we get something similar to COVID at this time in the cycle? Dead cat bounce, or still a higher high, or just it depends, or I don't know, could be the answer.
I mean, realistically, anyone who can tell you exactly what's going to happen going forward is lying to you. No one knows exactly what's going to happen. It's impossible to predict. But what I can say is, even though predicting where we might bottom or exactly how price action may play out is impossible to say, what I can say is the market is still driven by supply and demand economics, not just Bitcoin, but all markets. And what we can do by monitoring things like the spent output profit ratio, the MVRV Z score, stuff like that, is when we see people selling, that is what's going to drive price down. If we are not seeing people selling in huge masses due to fear and whatever fundamental event going on, that's going to massively limit how far down we may go. Whereas if we see, again, something like the value days destroyed, multiple shooting to the upside, where long-term holders are really panicking and selling, then that is obviously going to amplify how far we could retrace. I do think we are getting diminishing returns, not only to the upside, but diminishing drawdowns as the market cap of Bitcoin increases. Of course, an asset that's a few $100 billion can go down 80, 90%, but an asset that's a few $1 trillion, that's a lot more capital to move. So I do think that we maybe see a 60, 70, 75% drawdown at some point. Do I think that's going to be because of a black swan event like COVID? Well, that's impossible to predict. But at some point that is going to happen. And the way that we can identify when that is occurring is when we see people selling. And the way that we'll identify when that's stopped is when we see selling dry up and these long-term experienced holders, this smart money, begin accumulating once again.
Are there any charts that are showing any very bullish things at the moment?
Yes. Let me get some up. I'm
Just
glad
one.
you asked.
I mean, I want to feel good before we finish the stream. some hopium.
Yeah, of course. So what I can do is share two charts here. So just 1 second. It is this one. So we have the MVRV Z score, like I mentioned previously.
And before you start, guys, remember to ask questions for Matt from now, and we're gonna take them in order. Then we do the QA, and then we finish the stream before it's 1 hour, more or less. So make sure you write down the comments down below on the YouTube stream. That's where I can read them. Thanks.
Great. So this is the MVRV Z score. So a metric we've discussed a few times today, which is the realized price. We've discussed specifically the short-term holder realized price to begin with and the long-term holder realized price. But this is the overall realized price. This is taking into account not just long-term holders, but short-term holders. Every single holder is accounted in this. And the long-term holder realized price, what we can do is just multiply that by the circulating supply to get this realized cap of BTC. And once we divide the market cap of BTC, the market value by the realized value, and then just standardize that, we get the Z score, which has historically very accurately identified market peaks and bottoms in BTC. And what we can see is there is still considerable room to the upside in this metric. Again, on-chain data is just looking at human psychology, and there's pretty predictable patterns in at what point investors begin to take profit on their positions, at what point investors begin to capitulate on their positions. And just by multiplying the average cost basis profit, we can usually identify pretty accurately when the market is topping out. And what we can see currently is this is considerably far away from topping out. And what we've actually released recently, because another argument we've seen people making is because we saw the previous cycles have incredibly high values on this MVRV score, way up into these upper 10 plus values. And in the previous cycle, it was only around a 7. There's a couple ways to explain that. I think the rounded top definitely muted how high this cycle could have gone. So I don't necessarily think in this cycle we're going to see a considerably lower value in this. But just in case we do, to account for that, we've released the MVRV score 2-year rolling chart. Now, rather than taking into account the entire history of BTC and all of the standard deviations, volatility of Bitcoin throughout its history, which is reducing that Z score slightly, what we can do is just specifically look at the previous 2 years of price action to standardize this data. So on a half cycle basis, what we can see is, again, this is very accurately identified Bitcoin market peaks and bottoms as well. There's no lines on this currently, but if I just reload, you can kind of roughly see sell and buy regions for this. What we can do is, if I just get this up, somewhere around a 4 has historically marked cycle peaks, and somewhere beneath kind of -1 has indicated market bottoms for BTC. What we can see is currently we're at a value of around 1. So still plenty of upside room to go, considerably lower than what we saw in the previous peak we set in March of last year, around $73,000, $74,000. And even if we don't reach into this upper regions of 3, 4, 5, etc., we can still see the general trend once we see a huge amount of profit to the upside. Even if it's slightly lower than this top here, we look for confluence, we start to look at other signals, profit taking by long-term holders, etc., which we are seeing decline. But once that's all kind of aligning to maybe signal a cycle peak, of course, it's your signal to start scaling out. But this is still miles away from a topping signal.
Cool. Yeah, that's actually bullish. I got a question here. It's not necessarily on-chain data. I'm going to show it in the screen so you can see it as well, Matt. Hi, Matt and Mariano. Love the analysis and content. Are you able to look at the BTC dominance chart? Really interested on your thoughts on this. I'm just going to show the dominance and do some early thoughts. And feel free to jump in, Matt.
Yeah.
First, I need to find dominance. I got so many tabs. This is the nightmare of the influencer. Too many tabs. Cool. Sharing the screen. And let's hide this comment. So this is the dominance. If you're not familiar with this is just the market cap of Bitcoin over all crypto. And this is historical data. Obviously, early days, it was all Bitcoin. Then some altcoins came in. And what people consider an altcoin season is the flow of the market cap of Bitcoin going back into altcoins. And there's been all this period from 2022 where the dominance has been coming up. And there was the expectation of topping somewhere around the 60%. More specifically, Benjamin Cowen made this extremely popular because everybody is on the hope to be able to rotate Bitcoin into altcoins and do it at the right time, which has proven to be really difficult in this cycle, particularly because of the lack of liquidity. Is actually retail is the one that wants to flip into altcoins. Institutions are even, stepping out from Ethereum because they primarily are interested in Bitcoin. That is their first step into crypto assets. Although there is some early interest on Ethereum spot ETF as well, that is still not as significant as with Bitcoin. So going back into the dominance, our expectation is that this falling wedge was going to eventually break down with the bearish target. And so far, it has come back up to retest the breakdown, and now it's putting a higher low. And what we don't want to see in here is, a close in a candle higher than 59%, in my opinion, because otherwise we get all the structure to start a channel up, an uptrend. And ideally, we get a rejection somewhere in here, and then we break the low. But for that, I think there has to be some bullish moves in general in the market. At the moment, there is so much fear, and that's holding back the potential good performance of the altcoins. I know today is going to be all about Bitcoin. I just wanted to touch base on a little bit on the Bitcoin dominance. If you want to add something, Matt, as well. And if you have any specific questions about the Bitcoin dominance, I guess everybody wants to know if dominance is going to eventually collapse somewhere in 2025. My short answer to that is, if there is liquidity coming in from different sources. I usually cover all of those. I'm not going to go into detail today on that full analysis, but it's less likely that at this point in time we see something as significant as this rotation that happened in 2020 into 2021. That was an impressive move down of the dominance of 46%. So far, we have moved down 12%. My expectation is that with lack of liquidity in this dry environment, I don't think we can do a move all the way to 40, but possibly we can get a decent altcoin season getting into 20, which is both going to be less significant in terms of the profit taking, how high you can get, but not just that, the timing. So this was 170 days of altcoin season. So if we get an altcoin season in here and this constitutes one, 170 days will end in May, but we still don't get anything decent because the dominance is back into a potential uptrend. Anyways, I'll leave it there with the Bitcoin dominance because it's too much going into altcoins. Today's video is all about Bitcoin. Is there something you would like to share about Bitcoin dominance? Or otherwise, we can go to other charts.
I have a great chart to share, actually. So if I can share this, it's a trading view chart, and it's similar to Bitcoin dominance, but it is something I look at. I do look at Bitcoin dominance, but this I think is a great chart as well. So it might look a little confusing. What I'm looking at here is specifically US dollar tether dominance. So this is the black line here, and then the orange line is just Bitcoin. So if I can just hide that, we can see this fluctuates. It's trending to the upside in general. But this is the USDT dominance. Now, what I've done here is just add a standard RSI indicator to look at the strength of USDT dominance. And what we can see is when this is incredibly low, it indicates that no one's really wanting US dollars. Everyone prefers more speculative risk on assets. If I just add BTC back on, what we can see is when this is topping out, if I get the drawing tool here, when this is topping out here, it indicates people flooding back into stable coins. The dominance for stable coins is increasing. There's an overwhelming fear in the market. And historically, this marks market bottoms. When people don't want to be holding speculative assets, again, counter trade indicator, this is a great period to be accumulating BTC. Same is true when we are at these incredibly low values. Once we see in these big downward spikes here, this is when Bitcoin and subsequently other assets, altcoins, whatever you're trading, are usually topping out. When people are selling all their stable coins, I just want speculation, I want more returns, etc., etc. These are actually the periods of time when you should be maybe scaling out or at least managing your risk, expecting a little bit of drawdown. So that's just another chart I don't really see anyone talking about, but it's something I've used pretty well for a few years now.
A question about this chart. I'm surprised that you're using RSI and not the Crosby ratio. I love the cross-V ratio. Actually, it belongs to what's included in Bitcoin Magazine Pro. Many people are asking me where is it coming from? What does it do? But I find it more accurate when it comes to just getting out of the oscillator the extremes. Okay, so for example, for breakouts and for doing the full analysis, I still prefer the RSI, but I trust a lot more being in the overbought, oversold, the cross-V ratio versus being on those extremes in the RSI myself.
Yeah, so of course, I'm a little biased as well. It's a metric that we've created at Bitcoin Magazine Pro. That does work exceptionally well at marking market cycle bottoms and tops. But as well as trying to, obviously get people to use our data, not because it just helps us, but it helps you improve your own analysis, speed up your own, investing process, etc. But I wanted to make sure that this was something accessible for everyone. So yes, the Crosby ratio, it actually shows incredibly similar signals to the
Similar.
RSI
Yes, true.
bottoming out at the same time. Um, but just as a way for people to test this out freely and see if it works for their system, the RSI does work just as well. It's something that everyone can access freely. You don't need any subscriptions. And yeah, just as a quick tool to check sentiment amongst crypto investors, I think it's a great little thing to add to your arsenal.
Can you flip it to the weekly time frame? Just
Yes.
so how is it looking here? So early 2024 was the
So yeah, unfortunately, there's not the longest back testing, data history available on the asset. What we can see is, so here at the market cycle peak, which was, it's a little delayed on the weekly, I guess.
yeah,
It was down
definitely.
there, and then, for example, when Bitcoin was topping out over here, bottomed out. So the thing is, on the weekly, is it, because the dominance is kind of trending to the upside constantly. This is kind of warped by that fact. Even though we're seeing kind of swings to the upside and downside on this dominance, it does tend to trend to the upside as more and more people use stable coins. So I think on the daily, it's best used. I've even used it on intraday timeframes. If you go on something potentially like the 4 hour, if you're doing much more frequent trading, then again, you can see as this is topping out or here, then it's a little swing play there. As this is bottoming out here, max the local peak. Same again here, as this is bottoming out, max the local low we had here. So just, yeah, I think it's a pretty versatile and an easy, free tool that everyone can play around with, and just something to add alongside just plain BTC dominance.
I'm definitely gonna have a look at that one. I've been tracking the USDT dominance, but the trends with lines and stuff like that. But with the RSI, I don't know why I didn't come up with that idea. It's actually brilliant. I've got a new question here. You can see it on the screen now from Royal. Do you guys think that it's possible that in the future the traditional 4-year BTC cycle goes completely out of the window despite the 4-year halving? I guess this could be in both ways, so shorter or longer cycles. Yeah, I guess that's the question. Do you want to take that one, Matt?
Yep. So again, I'm going to share some data here. So this also kind of answers a few questions I saw previously about how can we be bullish about the fundamentals of the economy in the US, etc., when there's CPI and PPI, etc., coming out. Bitcoin's 4-year cycle, while is influenced somewhat by the halving event, is mainly influenced by global liquidity, which also operates on a typical 4-year cycle, which historically has correlated almost one-to-one with Bitcoin's returns. When we see a huge expansion in global bank balance sheets, this typically leads to a massive Bitcoin bull cycle. And once we see contraction, once we see central banks tightening up and trying to prevent a recession in economies, this is when we see Bitcoin lack. Supply and demand economics doesn't just work to Bitcoin, it works to US dollars. Once we see the supply of dollars massively increasing and demand even remains constant, the purchasing power decreases, people look for things that are going to provide a return. Speculative assets like Bitcoin do that exceptionally well. And what we are seeing, even though we've had a slight retracement in this over the past few weeks and months, really, this is still pretty typical. We usually have quite long drawn out periods in this intra-cycle global liquidity cycle where we kind of decrease, have a little bit of contraction, or just go sideways. But typically the trend is still to the upside. And this is what's going to drive this cycle considerably higher. And why am I bullish going forward? Well, because the US president coming in, Trump, we have, this isn't like a new president that we don't know what he's going to be doing. What we can do is check this. and see, oh, when he came into power in, well, January 2017, immediately we saw a huge surge in global liquidity. And that was mainly driven by the US economy. What we can see is when Trump came into power, this is the US dollar strength index, or the DXY. Again, when did he come into power? January 2017, after multiple years of this increasing. Immediately, the US dollar decreases in its purchasing power relative, which fuels big cycles in more speculative assets like equities. It's more beneficial and increase the supply of liquidity. So we've seen he's done that before. Do I doubt he's going to do that again? No. He's even talking about buying 1 million Bitcoin as a strategic reserve. Do I think that's going to happen? I'm not sure. But I think being bearish right now because there's a 0.01% increase or difference in what we expected inflation to be is a little short-sighted for how bullish the macro looks over the next few months and years. Oh, so sorry, just to go back to the original question.
Yeah.
The 4-year cycle. I don't think that's going to last forever. The halving events are having a diminishing impact on the BTC cycles. As we've already got 94% of BTC already in circulation, that inflationary rate cut is going to have a marginal impact on the amount of BTC coming into the circulating supply. So I do think at some point the 4-year cycle is going to end. But I think, at least for this cycle, considering we're still following global liquidity, I don't see any reason why we should doubt that something similar will happen again this cycle at least.
Cool. And an additional question to that comes from the global liquidity that you're monitoring in the system. Do you have any way of monitoring not just the global liquidity that affects all markets, but also the specific one that goes into crypto? How do you visualize, or what sources of data do you use to monitor specifically what comes into the crypto space that could, potentially pump the markets or make it more sustainable, as in staying in the cycle rally?
Yeah, so great question. So obviously we now have the ETFs, which are easy enough to track. We can just see how much the spot ETFs are accumulating in US dollar terms and in BTC terms. We can see that they've accumulated, ignoring the GBTC outflows, that they've accumulated around 1 million BTC and over $60 billion of inflows into the largest ETFs, which is easy to track and very bullish to see the capital inflows from an institutional perspective. And from a retail perspective, we can look at something like the Bitcoin cycle capital flows. Now, this is a little bit more of a complex chart, but what this is essentially looking at is the realized price that we were looking at previously. We can look at the influence on the average cost basis of all BTC per age band. So again, sounds complicated, but this red one here is looking at investors who have been in the market, who have accumulated Bitcoin within just 1 month. What we can see is when they are accumulating very heavily, they're buying at considerably higher prices than those that have bought Bitcoin and held for a 1 to 2 year period. So when we see a huge disparity between the prices new investors are paying and the prices that previous investors are paying, that indicates that new capital is coming in to drive prices considerably higher. And again, usually we see this topping out at above 50%. I can just zoom in here and I'll hide the BTC price action. We can see in the previous cycle peak, this was at around 54% where it topped, before that 67. And right now we're only at about 35%. So there's still a substantial amount of room to go for new capital to come in. But once we do see this massively spiking to the upside, indicating new capital flowing into Bitcoin at maybe irrationally high prices, that's another good part of confluence to say maybe we're getting close to a cycle peak.
Truth. There's a question from Joseph. Perfect collab and explanation. Do we have any resources where we can compute total ETF BTC to be able to estimate the possible BTC of that can affect BTC dominance? I mean, let's remove the ETF BTC. So if we want to isolate the influence of the ETF and just focus on what's left, I guess that's a question from Joseph.
So, I mean, in specific terms of BTC dominance, we don't necessarily have anything around that. We're mainly Bitcoin focused. But I do think even though the institutions are having a massive impact on Bitcoin, I think people may be slightly overblowing the influence they're having. So once we take into account all of the BTC that the ETFs hold, all of the Bitcoin that Saylor and other corporations are holding, this amounts to about 1.5 million Bitcoin, which is a substantial amount, no doubt, but is only about 7 and a bit percent of the circulating supply. So over 92% of circulating Bitcoin is still held by everyday retail investors like me and you. And I know there's going to be a few million lost before people say that's not exactly right. But either way, a vast majority of the influence of the Bitcoin price action is still influenced by everyday traders and investors. So while the ETFs are having a growing and growing impact on this, for now, obviously it's something we need to consider, but don't think that they are overruling the crypto markets and they can decide if we go up or down or what Bitcoin dominance does. This is still very much up to what everyday investors are doing.
Cool. That's pretty cool, pretty interesting. And I think we are almost coming to the end of the hour. It was really interesting to have you, Matt, and I'm really hoping we can do another episode. I believe we have something potentially scheduled with Coin Bureau Trading Channel as well, coming in on maybe early February or late January. I'm just looking forward to it as well, to keep up with all the on-chain data that definitely matters in the cycle. Thanks for joining, and I'm hoping to see you soon next time.
Of course, great. Thank you very much for having me. I hope the flu goes away soon and you're feeling a lot better in yourself. But yeah, looking forward to joining you again in the future.
Cheers. Thank you so much, guys, for